Record. Right, our meeting is officially started. So I've been saying, we know quite a number of people have been trading using their own concepts, different concepts. We've been trading using supply and demand. Some people have been using ICT. Some people have been using price action. Some people have been using PTMM. Some people have been using whatsoever strategy that they use. Well, there's not like there's no problem in using whatever strategy that you think you can use. The problem is when you want to start using strategies that don't make sense. Right. So what I mean to say is each and any strategy that we see on earth works. But at the end of the day, you have to know which strategy you stick to. I myself, some point I used BTM, some point I used price action, some point I used SCT, some point I used Elliott waves, some point I used, those indicators and stuff. Right. But along my years of trading, to remind you, I've been trading for the past 6 years. This year marks my 7th year. Right. So for the past 6 years, I've tried different strategies. I've tried different things. I've tried, different methods that I thought maybe can help. Right. So the most effective or the most top two strategies that I've seen to work for me have been smart money and price action. So I'll share my whiteboard so that anything that I'm going to say, you're going to see it. And when you see it, you're going to have to write it down. Okay. So let me share my whiteboard with you. Let me share my board with you. Right. So here we are. I hope you can all see my screen now, which is this one. Right. So there's what we call price action, right? And then there's what we call smart money concepts. Basically, what price action is we can define it as candlestick formation. Candlestick formation. And that smart money, there's a lot of people that define smart money in funny ways. Sometimes I even laugh. Smart money is just basically a concept whereby you trade along with the banks. You don't trade as if you are the bank, but you trade along with them. Meaning you wait for institutions to enter the market before you yourself enters and try to see where institutions have entered, and then you make use of that. And then you put it to advantage. Right. So we'll start with price action. Price action is candlestick formation, right? It's very important for each and every trader on earth to know what price action is. Unless maybe you are a market maker and you are saying, you know what, I'm a market maker. I work at so and so firm, and just because we're fans, we have to pump price here and there. Right. So what is a candlestick? I know some people will be like, my guy, you're talking about candlesticks, things that we know, things that we've actually been doing. You know, that ignorance of someone saying just because you know that it's a candlestick, so then you have to ignore it. Well, I don't think that's okay. Okay, right. So So we have three most common types of candlesticks that people ignore. Or in fact, what I can say is candlestick patterns that people ignore. You know, if you call yourself a forex trader and don't know these patterns, well, maybe sometimes you know them, but you don't know what you're dealing with. Or maybe sometimes you just don't know them. We have what we call a morning star. Morning star. We have what we call an evening star. Right. And what we have what we call an engulfing, right, candle. You may know all other candlesticks that are in the candlestick Bible, but if you don't master these, your profitability will be limited. Because these candlesticks, they carry money. Not just money, but tons of money. Do you know that as a forex trader, you can just trade using these three candlesticks? You can just trade using those three candlesticks. And then at the end of the day, you become profitable. Right. We have what to call an uptrend, and we have what to call a downtrend. What is an uptrend? An uptrend means price is going up. And what is a downtrend? A downtrend means price is going down. Right. The topic that we are doing is candlesticks. And I'm going to continue with that candlesticks topic. Right. So I want you to write wherever you are writing, be it in your phone, your iPad, I don't know, your book. We are still under the topic of candlesticks. But when you're under that topic, there are certain things you have to understand. Okay. So we have what we call an uptrend. We have what we call a downtrend. And remember, we said we have what we call a morning star, an evening star, and an engulfing. Right. Now, some people, you want to take the hardest way or the hardest approach. You want to take the hardest approach into knowing how you can spot an uptrend or how you can spot a downtrend. It's very easy and simple. Remember, we are still under the topic of candlesticks. Right. Now, we have what you call an A, B, C, D move. We have what you call a what? A, B, C, and D move. A, B, C, D. Right. Just by noticing these alone, I'm confident enough to say that I can spot an uptrend. And I can have another A, B, C, D move. And just by spotting these as well, I'm confident enough to say that I can spot a downtrend. Ladies and gentlemen, this Zoom session is recorded. So after I'm done, I'm going to post it on YouTube. Please, 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 I beg, don't mind my background noise. My friend is parking outside there, so you might get some bit of interference. All right. Now, back to business. So, the reason why I'm teaching you direction is so that you can be able to know where to spot your evening stars and your morning stars. But what we want to focus on is where they are found within an uptrend or a downtrend. If you see a morning star or an evening star in between a trend, it doesn't mean anything, right? But if you see it at areas that we expect it to be, then it means everything. Okay. Now, we want to start with an uptrend, right? So, while I'm teaching you these candlesticks, I'm also teaching you how to spot direction. I'm also introducing a little bit of market structure, right? So, I want you to forget everything that you can maybe. I know someone maybe a year from now or 6 months from now, you're going to be relating to this video. So what I want you to do is I just want you to forget about things that happened in the past, but things that you actually see on your charts at that current time. Okay. So an A move should give you what we call a B. And this B, we call it a high. And a B move should give you what you call a C move. And this C move, we call it a low. Right. The most important part is how to know if you are actually in an uptrend. If you get A, B, and C, this is not convincing enough to tell us that we are in an uptrend. The only thing that can convince us enough to say that we are in an uptrend is when we break B going up to give us D. You can name it whatever you want, X, Y, Z, or D, E, F, G, I don't know. But what we want to see is this scenario whereby we break this B and make a new high. So now we are going to leave the A, B, C, and D. Those ones are for newbies. So I understand now we are not newbies. Right. So we must spot a high and a low. And we must break that high with the force that comes from this low. Right. Why did I say force? Force means that we have pumped price that is sufficient enough to break our high so that we make a new high. When we make that new high, we must also make a new low for that high. Ladies and gentlemen, we are still under the topic of candlesticks, but we are now looking into market structure. Okay. So now I want you to take a look at this. As long as we keep on breaking those highs and making new lows, we are in an uptrend. Right. So I don't want to finish talking about market structure, the whole of market structure right now. So I'll get to my main point, which is morning stars and evening stars. Right. A morning star, we get it when we are ending a downtrend. And an evening star, we get it when we are ending an uptrend. So these candles that I'm talking about, how do they like how do they look like? Please, everything that I told you about those ABCD moves, highs and lows, in a few minutes, you're going to see You're going to see that stuff playing out, so don't worry. Right. So let's do this. A morning star pattern. We get it when we are ending a downtrend, right? So what we want to see is we want to focus on three main candles. So for newbies, I'll start like this. I'm not saying you're newbies. You guys are professionals, I know. But I want to teach this in the most simplest way possible, in the most simplest way that I can, right? So let's say we are in a downtrend. Let's say we are in a downtrend. Let's say we are in a downtrend. We have a certain type of candlestick characteristics that we see. You know, these candlesticks, you can actually see that they will be flowing down. I'll show you on the actual charts on my MT5, right? But we want to get to a point whereby we see some sort of a hammer or a pin like that. And before we go to the candle that comes after this, now I want you to say, this is your candlestick number one, which is this one. And just because you saw that pin, I want you to name it your candlestick number two. Remember, what we want to get are three candles. We want to get how many candles? Three candles. That can tell us a story, right? Remember candlesticks? If you read Baby Pips, that's for newbies. If you read Baby Pips, it will tell you that candlesticks tell you a story, right? So we want our third candle to look like this, right? Now, here is where most people get it wrong. Our third candle can look like this whole one white candle, which can go above the high of the first candle. Or our third candle, it can actually look like two candles, like this. This is still a morning star. Now, this is what we call a morning star pattern. And what does a morning star pattern consist of? One, two, three candles. Now, these three candles have names, right? The first one, I call it a push candle, right? And then the second one, I call it a what? A signal candle. Why do I call it a signal candle? Because most of the times it's different from all other candles that we will be witnessing before this move. And then the third candle, I like to call it the confirmation candle. Why do I call it the confirmation candle? Because the when I see a morning star forming, what do I do? Okay, getting people. Okay, Um, I'm getting people saying you've lost my sound. Can you hear me now? Can you hear me now? Okay, fine. Thanks. If you can hear me, it's okay. Very sorry for that. I'm very sorry for that. Okay, right. So, where were we? Right. We were where we were. Okay. So, this is what I was saying. I was saying for a moment, I want you to focus on these three candles, which are candlestick number one, which is our push candle, candlestick number two, which is our signal candle, and candlestick number three. Now, before candlestick number three comes, when we just discover that, you know what, there's a potential pattern that is about to play out between candlestick one and two, which might lead us to formation of a morning star, I want you to box, I want you to box this whole formation, right? Remember, this is before candlestick number three forms. Okay. So before that candlestick number three forms, I want you to know that there can be two outcomes. There's an outcome that you can expect that price can continue going down and our formation will become invalid, or price can move up and form a morning star pattern. Right. So I guess you now understand why we call that candle a confirmation candlestick. Because if it doesn't go up and it decides to go down, it has confirmed what? An uptrend, a downtrend, continuation of a downtrend. But if it breaks out the box and continues going and changes direction and goes up, it has confirmed that price is gonna buy. Right. Remember, these patterns, we can see them from any time frame that we have. Okay. You can see this in M1, M5, M15, H4, H1, M30, D1, month 1, and so on. Okay. Now, remember, I told you about the ABCD move. So, this is where I'm expecting to see my morning star so that it plays out. Right. I am having an A B. I'm expecting to see them on my C move. Right. So that I know that a morning star has formed and now I'm continuing going up. Right. Even if it comes again, I'm expecting to see it here. Right. So that I know that when price comes there, I'm expecting it to go up. Ladies and gentlemen, I've just taught you how to use the morning star pattern in the most simplest way that anyone can ever teach you to. I just hate you know the I just hate the thing that you have to learn forex that way. Forex is not even hard. Although it's not simple, it's not even hard. Just simple things. Simple. This is these are things that you see on your charts. I'm going to show you on my charts. If you think it's Photoshop, you can as well check with your charts. These are simple concepts, simple things that you'll be saying, ah, ah, ah. How did you catch this move? How did you get those spikes? How did you trade gold? How did you do what? How did you do what? Eh, you know, forex is simple. It's simple. Sometimes I even go to the charts. Sometimes I even fail to get power to start analyzing because some things are just in plain sight. But we don't know which direction to take. Right. Remember, any book you open that has to do anything with forex will start by teaching you candlesticks. Why don't they teach us these things so that when we even get to half of the books that we'll be reading, we already be gurus. I don't know sometimes how those people work. Forex shouldn't be hard. It should just be easy. It's better for you to say, you know what, getting money to fund my account is hard, but every concept you have it in your head. All right. Okay. Let's do this. Let's move. We'll come back to this. And this is we'll come back to this. Don't worry. We'll come back to this. We are not done yet. Remember, we have we have a lot of time together in this session. So now let's go to the evening star. And I'll show you how to enter using these before I go on the actual chart, so that when you start seeing on the actual chart, it will already be making sense. Okay. So what is an evening star pattern? An evening star pattern is the opposite of a morning star. You get it when you are finishing an uptrend and maybe you want to switch to a downtrend, or you are retracing going down for some time. And how does it look like? First candle, push candle. Second candle, signal candle, right, is reflect. Third candle is your confirmation. Right. So when you spot that you have candlestick number 1 and 2, your push candle and your signal candle, what do? You mark or you box, you put a box. When you put a box, what are you expecting? You're expecting price to break going down. If it breaks going down, then that means your evening star has been formed and it has been confirmed. But if it continues going up, then that means your evening star is invalid, so you don't take any trade. Right. So it's just the opposite of a morning star. Now, we have two entry models that we use when we are entering using a morning star and an evening star. Um, it's the same concept for both, but I'll just do it. All right. So, so as for me, what I like doing is this. When I discover that I have candlestick 1 and candlestick 2 in position, these are important to know, right? I like usually marking a box. Sorry, let me draw it precisely how I draw it. I like marking a box. When I mark a box, I have two entry models that I use. This candlestick number 1 is very important because I have to mark half of that candlestick. If my candlestick opens and it goes below the half of my first candlestick, which is this one, I start taking trades. This is what you call an aggressive entry model, whereby I put huge lot size. That's when you hear me say there's a Barracuda spy coming or there's a very huge move coming. So Where is my stop loss in this case? Is just a little bit above this tail, right? This is in the event that price may break here, but will fail to go down and want to come and then go back up and invalidate my pattern, right? If it continues going down and it closes below this box, then it means that I have a confirmation, right? So any trade that comes after a confirmation, we call it a safe entry, right? And I start entering more positions. Where is my stop loss in this case? When I enter here after confirmation, usually it's here at the half or here just above the tail. Easy, just like that, you make money. These are things that are on your charts, and I'm going to show you. I don't know why you sold when you were supposed to sell, and why you sold when you're supposed to buy, and why you bought when you're supposed to sell. Maybe it's because you didn't see these things. This is not the only topic that's there in forex, but it's one of those topics that can actually help you become profitable. Okay. So, I'll take you to the evening star. Okay, this was the evening star. I'll take you to the morning star. So the morning star, first candle, second candle. When we discover this, what do? We box. It's not going to be easy sometimes. Maybe when I'm presenting it like this, it sounds easy. But when you watch this video time, it's going to be hard. But what I'm going to tell you is, if you master this, you're going to become profitable in a very easy way. Sometimes just because someone tells you that they trade using the most fancy strategy there is, it doesn't mean that they are profitable. So after I spot two of these candles, what do? I mark half of that first candle. What am I expecting? If price comes above that half, I start pumping huge lots, right? Where is my stop loss? Below the tail. If it plays out, I keep on holding. If I'm saying I don't want to enter a risky trade, this aggressive entry, I want to enter a safe entry, what do? I wait for price to what? To close above my box, giving me a confirmation. And what do? I start entering here. Where's my stop loss? It's the half here or below this tail, right? Now some people don't know how to hold a trade, or how like they just don't know if a trade is valid, maybe for a very long time. Some people, they cut losses, they cut profits, like Vanante Madzungu, and you know exit early. Well, if you're that type of person who exits trades early, here's a simple model that you can use to maximize your profits without risking your account. For every two candlesticks your price moves in your direction, you shift your stop loss. So let's say your stop loss was here. You see this, you shift it up to here. If it moves again, I don't know, you shift it here, going up, going up, going up. When price card decides to come and hit your stop loss, let it hit that stop loss, but knowing that you are in profit. Okay. Right. So remember, I said whatever I'm saying here is under the topic of candlesticks. Now, we'll go back to that A, B, C, D move. That move. It's boring, but well, let's go back to that. I am your slave today. Right. I have managed to delete that. Um, there's someone writing on the screen. Please do not write. When you write on the screen, I'm able to know who you are. And I wouldn't want to say, okay, I have a special request here. Someone is saying, can you color the candlesticks so that I understand? Okay, fine. When I'm doing it on the actual charts, I'll show you with the colors. Okay. Now, remember, where is my pen? My pen, Zura. Remember what we said with an A, B, C, D move, that move going up. So we expect to see evening stars at these areas, morning stars at these areas, evening stars at these areas, morning stars at these areas, evening stars at these areas, morning stars at those areas. Okay, are we understanding? Can we just type yes if you're understanding? Just a Y. Would you- Just type yes if you're understanding, type yes. Mm, mm. You are all beautiful souls. I'm seeing yeses, yeses, yeses. Then that means we are understanding. Right. That's great. So let's do this. Now, we want to put aside the engulfing and we want just to focus on those two. So let me go on the actual charts here. Let me go on my actual charts. I want you to see what I mean. All right. Now, I'm gonna be sharing my screen. We can all see my MT5, right? Okay, great. Great. I want you to see something. We'll start, when you start analyzing charts or when you start pointing certain things on a chart, what you want to do is you want to start reading charts the simplest way that you can. What you see here is an evening star formation here, right? What you see here again, this one is an engulfing. I didn't teach you about that, but I will. What you see here again is after that small buy retracement, we have an evening star again, right? Then our price dropped. It's that small retracement again. We have those small evening stars, although I wouldn't want to focus on them. I guess I'll just have to teach you on these engulfing candles soon after this so that you understand, because I don't think for some people it would make sense. Actually, what an engulfing candle is, it looks like this before I go any further. Some people, your minds will explode. What an a engulfing candle is, we only have two candles, right? Like this. So let's say we're in a downtrend, then we find another candle that comes and eats this whole previous candle. So an engulfing candle is this one, right? It closes above the open and the close of the previous candle. That's how best I can describe it. So let's go back to the charts. So here we are. Let me just try to go to a larger time frame so that we can see more defined moves. Here we have a morning star candle pattern. Sometimes you don't get them in ways that you can actually expect. It's not as smooth as it looks on paper, right? Morning star candle, we were selling, then it switched to a buy. When we're ending this whole buy trend, what do we see? An evening star candle, and then we started selling. When we're selling here, what did we see? We saw another morning star candle formation here. I think we can all see it, right? And then we started buying. As we were buying, what do you see? An evening star candle here, an evening star candle here as well. And what did that signal? This signaled a downtrend, and then we sold with a small retracement. At the area of this small retracement, what do you see? A morning star. Then it bought a bit, it started selling again. This is an engulfing. So this is how they work. So let me choose another pair so that you see. The whole reason for this is so that you see and you learn, right? So we are in a downtrend. When finishing that downtrend, what do you see? We see that we have a morning star pattern here, and then we start buying. When we're finishing that buy trend, what do you see? We see an evening star here, and then we start selling. When we finish that sell trend, remember I was teaching you about confirmation. When you came here, most probably you would come and box it like this and expect your price to push up. But what do you see? You see that here price continued pushing down. So if you don't get any confirmation, then that pattern is not valid. Now here's a valid pattern, a morning star that formed here just soon after the failure of the previous morning star pattern, and then we go to an uptrend, right? Let's focus on where we see morning stars. On this uptrend again, what you see? An evening star here, and then it starts selling. When we finish that small downtrend, what you see? An evening star here, and then we start buying. Now, this is an engulfing candle. This is engulfing in the downward direction. So that means we've changed from an uptrend to a downtrend. So we start selling. We see a series of morning, evening stars like that are confusing. If you see it like this, if you see your candlesticks acting like this, ignore it. Sometimes they will cause more confusion than you can ever imagine. Now we are in this buy direction. What do you see? You see a morning star here, an evening star, I mean here, and then so on and so on and so on. Now I think you can see um where these are formed. If there's someone who still doesn't understand, please just type I can't understand. If you understand what I'm doing here, just type yes. Because this can be quite confusing. If you are understanding, type yes. If you're not, type no, so that I repeat. I'm getting yes, 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 no, one no, yes, yes, yes. Okay, some people are typing no. We have more yeses than nos, but just because we have more yeses doesn't mean we can't accommodate those who can understand. Remember, we want to create the best traders here. We want the best traders. We want the best traders. Okay, someone is saying I'm not understanding. No on engulfing candle. Right. I'll repeat again what an engulfing candle is. An engulfing candle is a candle that closes, that has its open and close above the open and close of the previous candle. Is that how I can put it? Is my English okay? Okay. In engulfing candle, let's say the first candle opened and closed. The engulfing candle is this one, the candlestick that comes and closes above the high of the previous candle and below the low of the previous candle. I think I've managed to describe it now. So let's say we were in a downtrend and we see a scenario like this. Then that means this is an engulfing candle. It has closed above the high of the previous low and it has closed below the low of the previous candle, I mean. Now, usually this is how they work. If your engulfing candle is more to the upside, then that means most probably we are going to be buying. And if it is more to the downside, then it means most probably we are going to be selling. Right. I think here we can understand, right? Okay. So just by looking at the charts, this is an engulfing candle. I want you to look at this. Let's hunt for those engulfing candles so that others can understand what an engulfing candle is. Look here, we were in an uptrend, right? And this whole candle, yeah, you can actually see that it bullied this previous candle. It engulfed it, right? So this is what we call an engulfing candlestick. This is what we call an engulfing candlestick. Yeah, right. So let's go and look for another engulfing candle, right? Um, where can I find more engulfing candles? They are not really showing up. I don't know what's up with this pair. Well, someone is asking, so you can box the previous candle and search for an aggressive entry. Thoughts? Well, as for engulfing candles, I won't want to lie. I don't have solid entry models for engulfing candles. I only have solid entry models for evening star and morning stars. I've never really studied how to enter engulfing candles. As far as I know most of the things, allow me to distance myself from engulfing candles. I didn't really study them that much. You'd even find that okay, sorry, I got the step to the message that came from MZ. Okay. So you'd find out that I don't really fancy trading with them, although I know that they are very important and it's something that I have to look at. I won't lie and say you should go and enter it aggressively or you should enter it safely. Because if I want to take an aggressive entry on an engulfing candle, just thinking and visualizing, I don't think that would really be possible that much because I won't be knowing if it's an engulfing that is going to form. Right, since it only consists of two candles. So I wouldn't want to say go and do that. Unless maybe if you can backtest for yourself. Okay. Okay, thank you. Thank you for that, Takunda. Right. So now We move on to the next topic, which is, what's our next topic? Our next topic is market structure. I want you to write down market structure. Right. So we can just have a 2-minute break. We can just have a 2-minute break. We've been doing this lesson 1 hour non-stop. So we can just have a 2-minute break, and then by 2:10, we'll continue. Don't exit this session. If you exit, trust me, there's some other guys on the waiting room that are willing to join. If you come back after 2 minutes, the meeting will already be full. So let's just take a 2-minute break, and then we'll continue with market structure. Okay. Okay, I'm back. Right. So, dear family, we want to focus on market structure now. What is market structure, and why is it important for us to study market structure? Market structure basically is how the market moves. The market doesn't move in a programmed way, but it has certain patterns that it follows. Meaning to say, if we study those patterns and if we really know what to expect and when to expect it, then most probably we can flow with market structure. What I'm teaching you now follows a, sorry for my bad English there. What I'm teaching you now is found under a concept that we call smart money, right? So the market goes up, the market goes down. Sometimes the market just doesn't go anywhere. It moves sideways. Why does the market go up? Because we have buyers. Why does the market go down? Because we have sellers. Why does the market move sideways? Because we have low volume of people, or maybe we are building orders. Right. So it's very important to know where the market goes before we start trading. So when you open your charts, the first thing that you want to do is what? The first thing that you want to do is to know your direction and to know your market structure. Right. You know that ABCD move that I told you? It's still going to apply here. Right. And it's going to even make more sense here. When we are going up, we have a high, a low. We break this previous high to make a new high and a new low. We break this previous high to make a new high and a new low. Just by knowing this, you are able to say that you know where the market is going. And in this case, it's going upward. It's in a buy trend. As a trader, you say it's bullish. But you know, fancy words, they don't make you profit. Knowing the concept is what makes you profit. I see a lot of people saying, oh, you know what, then the market went bullish and there was volume and, you know, I don't know, church, and, you know, those technical terms. And then I'll just be trying to say, but at the end of the day, did you make money or not? So sometimes knowing those fancy words doesn't help. It just may be like proof that you are a trader, but you know, it doesn't help. Allow me to adjust my chair like this. Fine. So, if we are in a downtrend, we're getting lows and highs, lows and highs, lows and highs, lows and highs. The lows will be trending going downwards, and the highs as well will be trending going downwards. And when we're having a sideways movement, we can't say we'll be noticing any high or any low, but the market will just be moving sideways. Now, I want you to take note of what I'm going to say here, because it's also going to be very important, right? When we move up to make a high, we say this is an impulse, right? And when we move to make that low, this is a retracement, right? Impulse, retracement. Impulse, retracement. The reason why we call it an impulse move is because it produces some sort of a pulse, a price pulse, strong price pulse that flows within the direction that we want our market to flow. When you are trading, your money that you are having in your account, it's not really sufficient enough to move the market. We have other people that are trading the same market that we are trading, but they have bigger equities. We have institutions, we have banks, right? We have people with millions and billions of dollars that are trading the market. People with equity that even if they place trades, the market can respond to that. So what you want to do is you don't want to trade against those people, but you want to trade with them. You want to trade along them. You want to say, lead and I'll follow. But for those people to lead, for you to be able to tell that those people are now leading, you must be able to read the market. Now, before I get there, I want you to know this. When we are in an uptrend, the market is flowing, going up. We are having highs that are high trending and lows that are also high trending. What we don't want to see is we don't want to see price breaking these lows. Once price comes and breaks a previous low, it's cause for concern. It's an alarm that, you know what, we might change from an uptrend and now we are going to a downtrend. All right. But I have people who I've seen, especially these days, they mistake this. Remember, we have a high, a low, a high, a low, a high, a low, a high, a low. Since we are saying we must break previous highs to continue going up, we won't do this forever. At some point in time, eventually we have to change direction, right? So you can actually see that we can have a break of a low. The first break of a low when we were in an uptrend. Some people now they want to say we have definitely changed the direction. No. The first break of a low that you see when you are in an uptrend is not a change of direction, but we call it a change of character. The reason why we call it a change of character is we were having this flow of price going up, right? And we were not seeing any previous lows being broken. But since this is our first law that we see getting broken, we have changed character. And when we come to break the second law now, this is what we call a break of structure. Because our structure was in an uptrend. Right. Now, I want you to see this. We'll come to order blocks. I'm teaching you the most important stuff, although some other stuff I'm not allowed to teach you because of the mentorship classes that I hold. I'll definitely share things that are going to change how you trade, right? Okay, I'm having a message. Okay. Okay, thank you for that. Thank you. Someone is saying thank you. I'm just seeing this on my chats. Thank you. These are things that are on your chats. These are things that will also keep on presenting themselves on your chat. So when you have that uptrend and that first break of a previous low, you call it a change of character. Some people call it a church. This doesn't mean that you are now in a downtrend, but this means that you can change to a downtrend. And when you break the second low now, this means that you have changed and you're not going to a downtrend. The reason why this doesn't mean that you have broken structure is, remember, we have what you call an order block. Some people don't know about order blocks. I'll touch on that issue now. Let me look into it right now. No. If you were not writing down, now is the right time to write down. because this is premium stuff that I'm about to say here. I'm not saying that everything that I was saying is in premium. It is premium, but once you master this as well, you're going to be dangerous in a way. I would want you to replay this video maybe 3, 4 times, and then you'll be putting your charts aside. Trust me, it will make sense. Okay. So we have what you call order blocks. What is an order block? Right. An order block is a last buy before you sell candle or a last sell before you buy candle. Okay. And the reason why these are very important to us is, you know, these are some of the powerful entry models that we can use and that are very effective. There is a whole concept behind the making of an order block, but I don't feel like it's necessary to know. But since you're traders, let me just say it. You know, when you change direction, whether it's a small retracement or a big retracement, when you change direction, there is a reason behind that change of direction. And for that move to happen, there is price that is to be injected in the market to favor that direction or that retracement or that long move that you're going to witness. Okay. So what you find is you can be having a low. Let's say maybe you were in an uptrend. You can be having a low and a high. Remember, there's also a last buy before you sell candle here because this is a retracement, right? At some point it sold. But you can be having a last buy candle. I'll mark it in green like this, right? And you can be having and after that, you can see your price starting to sell. Let me put red because some people they want to understand through colors. Right. So let's say this is my candle that came after that. So an order block now is this candle that we see here. The last buy that we saw before that sale came. So what do we do with it? We mark it. I said we do what? We mark it. I'm not going to teach you all order block entry models, but I'll just teach you one order block entry model that is very effective and powerful. Because if I teach you all, even my mentorship students, they will get angry as well. Right. I have a message that just came in. All right. So the reason why we can see this is, imagine we were trading. Remember, we are retail traders. When I say we are retail traders, I mean it's because of our equity. We don't have huge money that is big enough to move the market, right? There's another message. Who's this? Someone said mentorship students don't be angry on family. Yeah, they'll be angry. So as I was saying, sorry. Allow me to do this, guys. Okay. Here is how banks work, or here is how institutions work. What they do generally is they see that we are in an uptrend. Right. Let me remove this, all of this. We are in an uptrend. And we want to end this uptrend. So what do they do? They fund money. Let's say 1 million. 1 million is too little. Let's say they fund 500 million. So that 500 million is enough to give you what looks like a huge candlestick, right? And what you do, you get into panic mode, and then you say, you know what, price is now, it's now running away. I'm getting left behind. And when they pump that price, they create confusion in the market. And then what you guys do, you start selling or you start buying because you think that huge candle that just came or that fake huge candle that just came is going to keep on buying. After funding 500, what do they do? I'm trying to give you figures that we can easily weigh. They fund maybe 1.5 billion in the sale direction, and then your price starts moving heavily, going down, right? Remember, they've opened a position for 500 million on that candle. For maybe those 30 minutes, it got into profit. But when they funded that 1.5 billion, what are they doing? They are making profit more from the loss that they are making from this 500 million. But because every cent counts, remember, this 500 million is no longer 500 million, is no longer plus 500 million.